Hello and welcome to FlightGlobal Focus, your essential podcast for trusted aviation insight. We're glad to have you on board with us. I'm Kerry Reels, European Airlines Editor with FlightGlobal, and this week we're going to take a look at the mood among airlines in both Europe and North America, following the release of their second quarter earnings, most of which have now been reported. Joining me for this are our two Grahams, US-based Global Airlines Editor Graham Rapier and UK-based Contributing Airlines Editor Graham Dunn. To avoid confusion on this podcast, I'll refer to you as Graham D and Graham R. Hello to you both.
Hi. Yes, well, at least, you could have been more formal than just gone surnames, like being back at school.
Maybe I will. So I think we're going to take a look at Europe first. So Graham D, I'm going to turn to you. This is the quarter where the impact of surging fuel costs following the outbreak of war in Iran really started to hit home, wasn't it?
Yeah, no, absolutely. I mean, the first quarter was a sort of funny one. I kind of wrote about it a few times, describing it as kind of a calm before the storm, because whilst we've been talking about the Middle East conflict and high oil prices and surging fuel costs and the disruption, because of the hedging that European airlines have, especially the kind of the larger and financially very solid carriers have in terms of the level of fuel hedging they had, they were actually kind of not really impacted by that in the first quarter. And you throw in as well, there was a kind of out of that portion of fuel costs that were unhedged, actually some of that they didn't fly anyway because there were capacity cuts because of the disruption in the Middle East. So, the first quarter for some carriers, actually, fuel was counterintuitively was like a tailwind more than a headwind. But at the same time, in that first quarter, you had all the benefits from a demand side, especially for the network carriers, coming in sort of immediately. So in that first quarter, you were seeing, yes, there was a bit of disruption on Middle East services, which were disrupted, but that's a relatively small part of the overall market. And those carriers that were flying east to west, sort of, we're seeing a massive immediate spike and pickup in demand as passengers sought a kind of alternatives to the disrupted Gulf hubs to get from Asia to Europe. So, in the first quarter, actually, that is usually a loss-making quarter for European carriers, but what we saw actually was overall for European airlines. And on Airline Business, we have kind of 10, we run a benchmark of 10 European airline groups that we track across from quarter to quarter to sort of see how the market's developing. And in that first quarter, their losses were reduced. So they did pretty well. You get to the second quarter and there's really nowhere to hide because, yes, they've still got the fuel hedging. Yes, that's taking the edge off stuff. But the fuel costs and those higher fuel costs now are going straight in on the unhedged level of flights. So, we saw, across the board that fuel costs was surging for European carriers, and that was kind of outpacing the revenue gains. We've heard airline executives and leaders, they were still pretty positive about the revenue picture, they kept talking about the robust side of things, but it wasn't enough to offset the higher costs. And, I think with every crisis, you tend to find a new phrase that crops up, which emerges. And I think, Kerry, you'll have definitely heard this one on some of the calls that you covered, the recapture rates. And I think, Graham, you'll have had this as well, which we heard quite a lot about recapture rates in terms of essentially the amount of that extra fuel cost that airlines were able to recover through higher fares, be it through increased fares covering that, or even, more premium traffic that are able to attract. So everyone was talking about recapture rates. They are largely still pretty solid. I think, you're seeing lots of airlines talking about kind of 60% in that kind of ballpark, maybe more, of those extra costs they were able to recover through higher revenues. But, that took an impact. And all of that meant that profits over that second quarter were either down for those airlines that were still profitable, or in many cases, you saw those airlines swing to losses in a period which is usually pretty strong for European airlines. So, of these 10 airline groups that we cover, that we track in with the benchmark figures, operating profits essentially halved to about 2.8 billion. And net profits were at about 1.7 billion, which is kind of a third of the same period the previous year. There's a bit of currency exchange action going on in there as well, but you can see sort of the trend line. And the bulk of those profits from Europe certainly came from the big network carriers and Ryanair. And in terms of those network carriers, I guess IAG was probably leading the way, wasn't it, Kerry?
Yeah, so IAG remained profitable in the second quarter. It did manage to have a pretty good recapture rate and it was very well hedged. But even so, its operating profit was down by a quarter and its net profit fell by a third year on year, largely as a result of the increase in fuel costs. So the group did point to strong demand, which has been a recurring theme both in the first and second quarter, particularly in the premium cabins and especially on its transatlantic routes. Nevertheless, it expects full year capacity this year to be flat, but it is still confident that it can achieve its 12 to 15% operating margin despite the challenges ahead. So if we kind of take a look at the carriers within IAG and break it down by carrier a bit, British Airways stood out as the strongest performer. But Aer Lingus, the Irish subsidiary, was kind of an outlier in that it was the only one of the IAG airlines to post a first half operating loss. Now, ahead of the results coming out, Aer Lingus announced that it was going to reduce capacity by 6% this year. It was going to end 3 of its US routes, and it announced job cuts as well. So it's very much trying to turn this around. Aer Lingus's chief executive, Lynn Embleton, said on IAG's second quarter results call that she was confident the carrier could get to the 12% operating margin, but she did say it's going to take some time for these changes that they're putting in to come through. Changes are also happening at Vueling, IAG's Spanish low-cost unit, which is going to receive its first 3 737 MAXs this year. And they're saying that transitioning to an all 737 MAX fleet is going to significantly reduce costs for Vueling. So all of the carriers together working to make improvements ahead of the second half of the year and going into the second half. Over at Air France-KLM, the Franco-Dutch carrier has also reduced its full-year capacity guidance. It's now, not by much, it's saying now that it will add 2 to 3% capacity, slightly down from previously guided 2 to 4%. They had high fuel price impact again, which translated to a 70% reduction in second quarter net profit. That's despite, returning to that word that you mentioned, recapture, that's despite recapturing 85% of their increased fuel costs. So Air France-KLM, as we have seen, is now battling with the Lufthansa Group to take a stake in TAP. So I think as we look to see how airlines cope and what happens in the second half, all eyes will also be on that to see what's going to happen in the next chapter in the European consolidation story. So that's IAG and Air France-KLM. Graham, you were looking at Lufthansa. Do you want to tell us what happened there?
Yeah, Lufthansa Group was again a similar sort of story there. Operating profits were more than down by more than half. Even bigger hit on net profits. They were still profitable for that period. Lufthansa Group, it's again a similar story. Across the different carriers, their point-to-point operations were slightly loss-making. That covers kind of Eurowings and a bit of their interest in Sun Express. Brussels Airlines made a small loss as well, but probably the biggest focus is on Lufthansa, the German airline itself within there, the kind of which made a small loss in this period as well. Now, there's been a major kind of restructuring effort at Lufthansa over the last 2 or 3 years. There's been an effort to try and bring the profitability of that airline up to high levels. The airline's been probably more so than a number of airlines. They've been hit. They're going through a major fleet renewal process, and it's probably the worst time to do that for an airline, given the delivery delays and so forth that has continued to this industry to suffer. So they had a lot of challenges in terms of getting these new aircraft with a new product, which they're setting quite a lot of stall in. Making that happen quickly enough has been an issue. And then you've also seen them trying to address the cost base, and they've started a couple of different German AOCs and airlines over there, City Airlines and Discover, which have different kind of economics and efficiencies and labour agreements attached to them. And, as a result, we have seen things like, for example, not to be confused with City Airlines, Lufthansa CityLine, the regional carrier, which have been watching operating CRJs. So that they've accelerated the shutdown of those operations as a result of this. Now, all of this, labour is pretty central to all of this for Lufthansa, and the bit that pretty much dragged them finally into loss in the second quarter were the strike action, which happened in the second quarter. There was some in the first quarter as well, but strike action across those German operations. Now, we haven't seen any of that since that in April, and Carsten Spohr and the other Lufthansa executives were talking pretty positively about a kind of labour peace. They are in discussions at the moment. So probably a lot actually rests for Lufthansa on ensuring those labour deals get done in the German operations. So challenging times for Lufthansa is well, but not every airline. Most airlines across Europe, 9 out of 10 groups that we would track in our benchmark airlines, saw profits go down. But there was one exception, wasn't there, Kerry?
There was one exception, and that is Finnair, which stood out among its European peers as being the only airline to actually improve its profits in the second quarter. I think its operating profit increased fourfold compared with the same period last year. Now, we do have to take into account that last year's figures were impacted by industrial action, but even so, what Finnair really benefited from in the second quarter was that rerouting of traffic between Europe and Asia when they had to cut out the Gulf hubs. So they really took advantage of that and got some benefits from that. Nevertheless, despite this, they have maintained the profit guidance for the year, but they're being quite cautious about the rest of the year. So they're planning to increase capacity by 1%. Previously, they were looking at a 3% increase, and they did point to the geopolitical uncertainty, which they said could affect their results in the second half of the year. So there's still a lot of uncertainty around, geopolitically speaking, in terms of what's going to come in the next few months. Elsewhere, let's talk a bit about the Turkish carriers, Graham. I think that they had a pretty difficult quarter amid those demand challenges. Is that right?
Yeah, I just thought it was worth a quick mention of Turkey. Obviously, it kind of straddles markets a little bit, but it was a sort of challenging period for Turkish carriers, partly because, of course, their location close to the Middle East means that not only was probably a slightly larger portion of their services to that region, so Pegasus and Turkish Airlines saw probably more disruption than many other European carriers, but also there was a bit of a demand hit in those initial uncertainty for people travelling to Turkey. That was kind of seen across the board for Turkish visitors. And so you were feeling that in March and April, later bookings and so forth. And April was quite a key month for that to happen. Now, Turkish carriers were talking about an improved picture on that. That seems to have kind of settled down. Then Pegasus, Turkish and Sun Express as well have all kind of talked about that picture improving. Since then, it was kind of a blip, but it did mean that for Turkish operators, that second quarter in particular was a bit of a challenge. And, Turkey as a market has done incredibly well in terms of very strong demand since the pandemic in particular. But maybe this looks like being a slightly quieter year for Turkish Airlines and Turkish capacity.
Yeah, it's interesting, isn't it, just to see how different carriers in different regions have been affected. So I think we've given a pretty good roundup there of the European airlines. So let's cross the Atlantic and talk about results in North America. Before we do that, though, we should begin by welcoming FlightGlobal's newest recruit, Graham Rapier. He came on board in July, which was quite a busy time to join the team. Graham, you jumped in straight away with the Farnborough Air Show and then dove into earnings season. So welcome to the team, and good to have you with us.
Hi, yeah, thank you, Kerry. It's been really busy, but very exciting. Obviously a very stressful quarter if you're an airline, but I think as a journalist, a little selfishly, it's exciting because things are happening and we get to see these strategy decisions and business plays play out in real time.
Definitely, and you really do see that covering the second quarter, the quarterly results. So I guess fuel was a big factor for North American carriers, which don't tend to be as well hedged as the European ones. And you've been covering those second quarter earnings calls for us. Do you want to give us kind of a rundown of the North American results and what stood out to you?
Sure. And I think you said it best. It really came down to fuel costs again, just like in Europe and elsewhere. It was top of mind for everyone. And they're sticking around really high. I think this week as we record, it's still about $3.80 per gallon. It's just very, very choppy. And you saw that as airlines cut their guidance or in some cases pulled it completely to just not even risk having that error out there in the market. Delta, for example, said it was their fuel was their highest quarterly expense in company history. And that's even with a buffer they have as owning their own refinery, which is very unique in terms of the North American market, because as you said, nobody hedges either.
Do any of the other North American carriers kind of stand out? You've mentioned Delta. What was happening with American and United?
Right. What it came down to across the industry, I think, was if you were making money, now you're making less. And if you were in the red, now you're even deeper in the red. Obviously, there's some nuance there. I think one example from American Airlines really sums it up well. CEO Robert Isom said that had they reported right after the quarter ended in the first week of July, that the profit outlook would have been 4 times better. But just a couple weeks later, as oil prices continued to chop up and down every single week, that turned into guidance of an EBITDA loss, actually. And I don't think airlines would ever say anything political on these earnings calls, but that, I think, spoke to the current moment of just a really, really prescient example of how tricky things are right now for these airlines.
Yeah, they've faced a lot of uncertainty, haven't they? But I think the US carriers as well have benefited from strong premium demand. Is that right? I know you wrote yesterday about American Airlines. They're going to go back to installing seatback screens in their narrow body aircraft, and everyone's trying to kind of capture that premium demand as well. Would you say that's the case in the US too?
Absolutely. And that was the case before all of this began. And now they've seen just across the board how resilient the demand for those front cabin seats are. So American is working to put in some seatback entertainment, which is a funny story of their about face from 10 years ago when they were literally ripping screens out of their new jets. They're also able to add some new main cabin extra and premium seats as part of those retrofits. And in the case of Delta, which has long been the premium leader in North America, they are still just seeing absolute insane demand for those premium seats that can really help bolster some of that choppiness in terms of demand for the main cabin seats and help that bottom line not fall too far into the red and recapture some of that fuel, as you said, Graham.
So we've talked about the challenges that airlines have faced in the second quarter, how they're trying to overcome them by recapturing the increased costs of fuel. We should talk a bit about the outlook for the rest of the year. Should we start with a European perspective on that? And Graham D., what are your thoughts on the second half of this year?
Yeah, I mean, my kind of underriding feeling at the end of it, and what I took as the sentiment from airlines was that it's still about uncertainty and volatility. It's just they're kind of more certain that they're going to have uncertainty and volatility. So there's kind of more of it. I think kind of, and they were reporting 3 months or so ago, no one quite knew how long the situation in the Middle East would take to unwind. But I think they're now kind of ready for geopolitical uncertainty to continue, at least across the remainder of this year or into this next quarter, as far as you could see. So you still didn't see airlines reporting very much in terms of how they see things developing. You definitely, I mean, Kerry, you mentioned it with Air France and a couple of those other carriers. There's a bit of caution when it comes to capacity. You can see they're tracking that back, and I'm certainly sensing airlines are keen to try and protect their margins as best as they can. I think you're seeing probably 1 or 2 more of these kind of small restructuring steps, maybe taking some of the older aircraft out of the fleet or the less fuel efficient ones. Not major restructuring changes or anything, but maybe 1 or 2 more bits like that. And as we talked about, most people seem pretty positive about demand and the robustness of that demand. But of course, you don't really know how that's going to develop going into the winter. There's a lot of unknowns there. And I think you've got a bit of an unknown in terms of, certainly for European carriers and those network operators, is what happens when the Middle East carriers return their capacity full on. I mean, we saw a bit of that during the second quarter, but it was a slightly later start to it. I didn't really get too much of a sense as to how much of an impact that might have on the yields and on the capacity supply demand of the market going forward.
Another question, I guess, is how long can they continue to keep the fares high? I know you can do that while demand is high, but how long are passengers going to be willing to pay extra for flights? And maybe that willingness to pay extra might tail off. And I guess the question is, how long can airlines keep bleeding more money out of passengers to cover these costs?
It's sort of an unknown, and it has always felt like the biggest unknown is what happens once you get out of that summer peak. I think people definitely want to travel. Graham, you talked about it as well, as you have, Kerry. That kind of, that a lot will count on that, on having strong premium demand and those initiatives to increase that kind of front end or ancillary services part of demand. And so a lot will be around that as well. Then you've got the kind of the challenges you already had. Supply chain issues. Are airlines going to get their aircraft on time? Airlines were reporting, we saw some sort of positive talk about coming towards the end of the GTF engine related issues. Someone like Wizz Air, for example, was talking about being out that by the end of 2027, and you're seeing some progress on that. But you have those issues which kind of were a challenge for airlines before high fuel and before Middle East disruption came in, and they remain issues. And the last thing worth flagging might also be, and you touched upon this as well, Kerry, that are we going to see sort of consolidation in the market or changes in the market? We've already seen someone like Air Baltic sort of adjusting their business model. That will involve or business strategy to take some capacity out. No idea what might ultimately happen with EasyJet and its new owners should that deal be completed. We have TAP and its privatization. So there's a lot out there that could have an impact on the market as well.
Yeah, there's an awful lot going on. Graham R., do you want to talk a bit about what you see for the second half of the year from an America's perspective?
There's a very similar read across on a lot of the things you said, Graham, to the North American carriers. I think you're seeing people be very, very careful with some of that off-peak flying, some very thin schedules there. Things like red eyes, where there's not quite a full, very profitable aircraft. But on the flip side, that means making sure that peak demand is absolutely filled with every seat you can possibly fill and making it as profitable as possible to really keep revenues up. So far, schedules are about flat for the third quarter, according to just outside data monitors. Across the board, people are targeting small single-digit growth through the end of the year compared to last year. But I'm not sure we'll see much that's a huge difference. It'll just be in where it really matters, hitting that demands. And as we said a second ago, a lot of that I think will be premium seats. In order to make sure that flights are profitable, we've seen a little bit of sitting down older, less efficient aircraft and replacing them with newer models as those become available either through leasers or new deliveries. That has the added bonus of usually those have a lot richer configurations. But we're seeing that in more than just Delta, American, United. Even the historical low-cost carriers in the US, and we used to have plenty, have largely eschewed their business models. Everybody but Southwest basically has big front seats now that they can sell at a premium, that they can really capture that demand. Allegiant, JetBlue are both adding domestic first classes, and they're very, very big in these leisure markets where they think they can blend that business and leisure traffic into somebody that's seeking a nicer experience and willing to pay for it. A lot of those are in markets like New England's to Florida, especially as we come into the fall and winter season, tends to be a very, very crowded market for the US airlines. Especially now that Spirit has left, there's some demands to be picked up there. And I think we're seeing JetBlue, Allegiant, some of the other upstarts like Avelo and Breeze also fight for some of that leisure travel demand, especially on the East Coast.
Yeah, there's an awful lot going on both sides of the Atlantic. I think going into the second half, airlines seem to be approaching it with caution, not quite sure how things are going to go geopolitically, and putting a real focus on premium products and competing for premium passengers, as well as kind of keeping the fares as high as they can to recapture those increased fuel costs. Well, thank you both very much for all of your insights, Graham and Graham. You've been listening to Flight Global Focus, which is a production of Flight Global with audio editing by Lucy Johnson. If you want to get in touch with us or for commercial opportunities related to the podcast, please email podcast@flightglobal.com. Listen, rate, review, and subscribe wherever you get your podcasts. I'm Kerry Reels for Flight Global Focus. Join us again next week for more in-depth analysis covering the latest developments in airlines, defence, and aerospace.